Hello and welcome to Chart Pattern Trading Masterclass by Wealthy Education. In this video, we will talk about understanding chart patterns. So the first thing you need to understand is, what is a chart pattern? Well, a chart pattern is just a group of candlesticks or bars, if you're using those, that form a larger pattern. So here's an example. You can take this brush here, click on rectangle, and by dragging like this, notice how price had gone back and forth between two levels. Now I'm going to extensively call this 1,000 and 1,300 in Ethereum. Not worried about the minutia of it right now, but what do you see? Well, you see a rectangle. Another one that you could point out on this chart is a triangle. This is what is known as a descending triangle. It's a very bearish or negative pattern. And you can see that we did, in fact, break down from there. So those are a couple examples of chart patterns. Chart patterns are just like an amalgamation, a grouping of candlesticks that gives you a bit of a heads up as to where the markets may go. So most patterns will give you a direction, or they will give you a certain measuring stick, like how far they should go. And I will go through all of those as we go through the pattern. But for example, so this is the descending triangle. Well, what this tells you is, and this is just really quick 30,000 foot view, tells you that the sellers are becoming more and more aggressive. You know, the buyers, the support for Ethereum is right around here. And once we break down, well, that tells you the directionality. But with this pattern, and a lot of patterns, not all patterns, but this pattern, you take the top of the triangle and you measure down, and that's where you expect the market to go. And it did. What you'll find is a lot of times it'll overshoot, but that's your measured move once you break out of that triangle. You should think of a chart pattern perhaps as consolidation. It's just the market trying to make up its mind. It's kind of leaning in one direction or the other. Or in the case of the rectangle, it's trying to decide whether it's going to go higher or lower. You know, neither the buyers nor the sellers are winning there. And again, don't worry about the exact chart patterns. Just understand that they give us a heads up. We'll go through plenty of those examples through this course. You need to take a look at lows and highs when you're looking at the market. So for example, this was a recent high because we had broken higher, just as that was a recent low. That was a recent high, recent low, recent high, recent low, recent high, recent low, recent high. A trend is simply a matter of, are we getting more higher highs and higher lows in an uptrend? So it would be something like that, you know, like if you had a line chart. Notice how price rises over time. Or are we getting lower highs and lower lows, which is a downtrend when price is falling? There's also sideways or consolidation, like, for example, down here in this rectangle. So there really is no trend. We're just kind of killing time. So be aware that there are three different types of trends. A lot of people get hung up in the minutia of a trend. You know, well, it's a 4-hour downtrend, but it's a daily uptrend. It's a weekly uptrend. You're going to save yourself a lot of headaches and recognize. So like here, this is the daily chart of Ethereum. There's the weekly chart. So you can see for the longest time, we were in an uptrend. Let's take a look at a market that's maybe not quite as crazy as crypto. Let's just take a look at a market in the dollar yen. Okay, so go ahead and remove these drawings. But you can see it's been pretty negative as of late this week. But when you look at it, it's still in an uptrend. There's really no two ways about it. Now, there are some people who trade on the hourly and go, wow, look at this major downtrend that's forming. It's a short-term blip on the radar. So the key part on trends is pay attention to the highest time frames. And then you drill down to smaller time frames to kind of fine tune your entries. There are market sentiment that you have to take into consideration. So in this case, this is the dollar against the Japanese yen, as the dollar has been just pummeling the Japanese yen. Market sentiment is very poor on the Japanese yen, very bearish, despite what we're seeing right as I recorded this. For almost 2 years, it's been straight up in the air against the yen. So that's a bearish sentiment. There is bullish sentiment for the US dollar. Again, this candle notwithstanding, and that candle does not change anything. Swing high, swing low. So in this case, that's a swing high. We pulled back to a swing low, swing high, swing low, swing high. And the beginning of a downtrend could form if we break down below the swing low there. Again, not going to hold my breath. So you'll notice that we have pulled back a couple of times. But really, even as crazy as this move has been, especially in the last few hours as I record this, you really don't have a trend change until you break that swing low. And even then, nothing's a guarantee. It just puts probabilities in your favor. So that's another 900 pips. That's a huge move in the Forex markets. So a lot of people, unfortunately, will see something like this and start shorting like crazy. And yes, there's short-term money to be made, but the real money is to be made with the longer-term moves. So there are such things as upward and downward breakouts that you'll need to be aware of. So this is a trend line, and we'll talk about that here in a minute, but or in a couple of videos. But it suggests that every time we reach this line, sellers come in and push the market lower. Well, we have broken out to the upside. Is it a trend change? We're right on the border, because there's a swing high there, of confirming everything, and it could be. Longer term, is it a trend change or a correction? Well, we don't know. There is an argument to be made, and you'll understand this as we go through the course, that maybe we could go as high as here. Well, if we go up to there and pull back, it's still not a trend change. But the intermediate trend certainly looks like it is trying to change. We're not there yet, but we're getting close. Pay attention to that swing high. There's also one there as well. There is a fine line between trend changes and corrections. And there are a lot of tools out there that you can use to kind of help you with that. And again, that is further in the course. There are also what is known as false breakouts. So, and false breakdowns. So notice how, let me go to a smaller time frame. 4 hour. There we go. 4 hour chart. So notice how we had been kind of going back and forth here in this little area, and we broke down. Well, that is a confirmed breakdown, or in the other direction, it would be a breakout. But sometimes you get what looks like a serious breakout, and it's a fake out. So this is a pattern here known as a W pattern. And you can see why. And a W pattern is considered to be very bullish. It signifies a reversal. It's a couple of lows and then you break higher, but it was a false breakout. We broke out just a bit and then fell right back down. There are some ways to pay attention to that as well, and perhaps avoid that trap. If you took this trade, let's just say you did, based upon the W pattern, you would have had to been very wary of this area here as potential resistance, which is what we'll talk about in the next video. So that could have been your target, or that might have been an area that said, you know what, it's not worth the risk. Now, I told you that some of these have measured moves, these patterns. Well, you're supposed to basically double the size. So it was a valid signal of this W pattern, but it stopped right where you would. So it just kind of depends on how you took a look at it. You don't want to get stuck in a false breakout. As soon as a pattern kicks a signal off and then it looks like it's going to go against you, it's time to get out. You have to take the small loss. That being said, sometimes patterns that fail are signals in and of themselves as well, if you think about it. When it looks like the market's leaning in one direction and then it just suddenly fails, that is something worth paying attention to. So there are a couple of different ways that you can look at various consolidations. So let's just take a look at a stock here. Meta or Facebook. Here is a pattern of a rectangle. You can see banged up against it 3 or 4 times here. And in this case, the market had been falling, right? So we get into here. And the question is, when we go sideways, is it what is known as a continuation or is it a reversal? Well, in this case, it was a continuation. You can see just how far it had dropped. That doesn't always play out, though. Sometimes the pattern can be a reversal. So as I zoom into this here, this has several of what are known as hammers. You could make a argument for what is known as a very, very ugly inverse head and shoulders. And that's a reversal pattern. And you can see we did, in fact, reverse. So, and we will talk about all these through the course. Just keep in mind, you need to understand swing highs and swing lows because they tell you about the structure of the market. When the market, and the higher the time frame, the more important they are. So when the market rallied, broke above this swing high here from here, the trend was completely changed. We pulled back to this swing low, broke this swing high, went higher, and it goes on and on. Keep in mind that there are a lot of tools that you can throw on top of these charts to help you out, and that's part of this course as well. So make sure that you understand the concept that we're looking at. We're looking at shapes on a chart to give us an idea of where momentum may be heading. That's the biggest takeaway. In the next video, we'll take a look at mastering support and resistance, which is the foundation to almost any technical analysis trading system you will run into.